Breaking economic news. Last bit of data are out this morning before the big show tomorrow. The July trade deficit and weekly jobless claims. What is the state of the U.S. economy 24 hours before the all-important monthly employment report? Initial unemployment claims, well, they rose 12,000 to 282,000 in the August 29 week. No sign yet that the stock market volatility last week is increasing layoffs, unless you want to count the 12,000 rise as meaningful, which we do not. Honestly, most investors do not know that Dow Industrials fell from all-time record highs in May this year to a 16.2% loss a week ago Monday, the flash crash opening on Monday, August 24. And please don't tell them we don't want to panic the herd and stampede them, sending them and all of our 401k retirement plans over the cliff, all for a simple misunderstanding over China, which is a long, long way from U.S. shores. Back to the USA, we got the trade balance, the international trade deficit for July, narrowed to $41.9 billion to start the third quarter, from $45.2 billion in June. Trade will be adding a little more to real GDP growth in the third quarter, not out till October 29, wait for it, but we will not revise our 2.9% forecast for growth any higher. It is wishful thinking high enough already, our estimate. How are exports doing in the trade data? The Fed wants to know. It was there in their July meeting press statement. Net exports stayed soft, they said. Well, not as soft with today's July data. It is really exports we want to know about, as some suspect that weak exports, weak industrial production, and weak durable goods orders all sang the same tune in the first months of the year. Weakness that made some at the Fed cautious, fearing the strong dollar was hurting the economic outlook. Well, like production and orders, U.S. exports of goods to the world are back up from the lows in July, rising 0.5% to $128.2 billion. Don't forget that trade is also our exports of services to the world, and these continue to grow in importance as they were pretty high at $60.3 billion in July. Net, not top-tier data this morning, but we think you could say initial jobless claims and the U.S. trade deficit data are consistent with the some further improvement the Fed told us in July they were waiting for to hike rates. The big show is a monthly employment situation report tomorrow, so buckle your seatbelts. Even the Fed will be tuning in from their vacations to check the data out. To keep a September 17 liftoff on the table, this is what we need to see, the three essential parts of the employment report. 1, payroll jobs need to be close to the 220,000 consensus. Number 2, the unemployment rate needs to fall a tenth from 5.2% from 5.3%, also consensus. Keep in mind the 3 decimal unemployment rate in July was 5.261%. So it is nano inches away from 5.2% already. And finally, number 3, the wage data that the stagnant wages and income inequality crowd embrace is coming out as well and has to meet expectations. The average hourly earnings data in August have to show a 0.2% increase for the month, which is 2.1% year to year. If the data fit, the Fed must admit that liftoff is very near. Stay tuned. Friday is shaping up to be a big news day. Bet on it.